Hey traders, it's Chris. Hope you are having a wonderful weekend. I just want to go over a couple of things on the gold on steroid software just to give you up to speed and to give you some peak performance in terms of entering, in terms of stops and targets and so on. And I also want to talk about price action and demand and supply areas where you can get into the position much quicker and gain even more profits, which is what it's all about at the end of the day, increasing your skills to be a better and more successful trader. So when it's very, very easy. Once you have a nice strong trend, you're going to get a sell signal, you're going to get the stop loss, you're going to get the 3 targets from the gold on steroid software. That's very nice and very easy. Now we can see that this week, due to the NFP, we have had a completely sideways price action on gold in the last week or so. And what that means is this is a fantastic trading opportunity for you to get into the markets, not in terms of trend, but in terms of range bound markets where you can get into the tops, get into the bottoms and make a lot of money. 200 or 300 pips is not uncommon within gold if you get it right. So I'm going to switch a few things off and then go into the details. So I'm going to go into a closer time frame, but have a look at this hourly chart. So the first thing you want to do is to establish where the price is in terms of range. If there is no range and it's trending, it's very clear. You won't have these demand zones and supply zones. Well, what I want you to do is once you get the supply zones and you've got the gold on steroid software, I want you to draw a line right slap back in the middle of supply. There is a line there. And you can see it there, so we can actually draw it to the end, and that's your line. And the same thing to do with the demand. Okay, so you've got the demand and you're just looking to draw a line right slap back in the middle there, just so you get an idea of the most important areas of confluence. So once we know that, we can say yes, it's ranging. I am interested in buying in these areas here. I'm interested in buying in these areas here, and I'm interested in selling in these areas here. Now, of course, at some stage we may get a breakout and it heads for up to $3,000, which we do expect, or it may break down. It may go down to 28.75 as we may expect. But in the meantime, while the price is holding ground into this range, then we can take advantage of this anytime in the future. Now, one thing to look out for, you can see a channel here. And whenever the price is outside the channel, it doesn't like it. It doesn't like it. There is going to be at least a correction. There's going to be at least a correction. There's going to be at least a correction, and so on and so forth. So look out for that. That's the first thing we look for in any kind of reversal pattern, because we're not talking about trends where we hold on to a position for a week or two or a day or two or a few hours. We are talking about a reversal point where we're interested in selling the position or we're interested in buying the position. So once we know where those areas are, how do we manage that? How do we get into the trade? And how do we get the entry? So let's go into that. This is my take on it. So I've zoomed into the 15-minute chart. And this yellow line is the center of the supply zone on the hour, and this yellow line here is the center part of the demand area on the hour. So very simple. You've still got the lines there. So these are prices of interest. Now I'm going to be talking about volumes and how to get in on the volumes as well. But before I do that, I want you to understand what we're looking for in terms of reversals and opening positions going the other way to the market based upon high probabilities. So we know from a fact that 29.25, this yellow line here, is a big problem. It's a big problem for the price. The price is not going to like it up there. And it's like a fish out of water. It just won't last long. And as you can see even on the 15-minute chart, we've got an outside bar. So once we get that situation here, then we are very interested in selling that at that point. Now, the simple way to do it, and what I would consider, is zooming into the 5-minute chart. And let's have a look at this. I'm going to draw another line here, right slap back in the middle of that order block. It's actually more than an order block, but it's highly accurate. And that's at 29.28. Yeah, so that line stays there. Let me go into the 5-minute chart. So this is of high interest, isn't it? So there's a couple of things here that have happened on Friday. We can see that we've got an outside bar on the hourly. It's coming to supply on the hourly. It's coming to supply on the 15. It's coming to supply on the 5-minute. There is no reason left but to trade this, because the opportunity and the probability of this price reversing at this stage are very, very high indeed. Okay, so we've got an outside bar on the 5-minute, we've got an outside bar on the 15 and the hourly as well, hitting very high supply zones, sell zones. And that to that area here is 218 pips. Okay, so let's go on a little bit further and see what other positions we could have during the trading week, and where you can actually do exactly the same thing over and over again. So this yellow line represents the hourly chart. Very, very high demand area, 28.95. We traded that, made a lot of money, and we can see we've got an outside bar. Whenever we get an outside bar, I will let VIP members know. And if you've got the charts, you should switch on your charts immediately, because that is a very, very high chance and very high probability that the price is going to have at least a correction. Now, a correction can mean 200 pips. It really can. And it gives you that trading opportunity to get into the price as quickly as possible. Now, I'm going to draw a vertical line here, exactly on that area there. Let's make that yellow so I can stand out. Let's move these out of the way. I want to give you some examples. So we can see that the price has outside bar on demand. That's the first thing, outside bar on demand. This is a very strong buying area. Now you can buy it on that area without any other thoughts or without any other qualms. You just might have to have a 50 to 100 pip stop, because the price could continue before it bites back and comes back into that correction. So I've zoomed into the 5-minute chart. Now the demand zone's probably not been drawn prior why this price is an outside bar here. It's drawn on the 15-minute chart and the hourly chart. So we can actually draw a block there if you like. If that's helpful to you, we can draw a block here, right slap back in the middle of the hourly chart. We can say that that is a very strong buying area. So just be aware, once you get closer to the time frames, you might not see the order blocks as clear. When they are clear, it's a no-brainer. So one thing you can do, let's get rid of that. Let's use this. Once you know the SP, once you know the areas of influence on the hourly, on the 15-minute, on the 5-minute, outside bars, on demand, in this instance I've given you the example, I'm going to zoom out. You're then waiting for the reversal, because of course the price can do what it likes. It can continue down for a bit before it zooms straight back up again. The market may be stop hunting at this point, and probably is, and so therefore you want to wait for the stops to be taken out. So we can actually do a couple of things here. We can draw a trend line, can't we? Somewhere like that. And then just wait for the break of the trend line. Totally up to you. You can enter a position as soon as the Heikin Ashi candle goes green. Okay, because you know these areas are right. You know the area is right. You know there's going to be a bounce. you know there's going to be 200 pips. Okay. The other tool that we do use in the advanced pro charts a lot is the volume candles. So this volume indicator here. And you're looking for the price to go green above this yellow line here. It's set at 50. You should know that if you've got the advanced pro charts. And then you just wait for the price. 5-minute chart, 5-minute chart. And then you are going to buy it as soon as the price has high volume into that, going back into the channel. Now in this example I showed you earlier, where we had a price going up to demand, supply on the hourly, on the 15-minute and on the 5-minute, you can simply go short at that point there. You may prefer to wait for the reversal and for volume to come back in. Totally up to you. But have a look at this here. Once the volume comes above the 50, that might be your entry, 50 pip stop and 100 pip target. So there's many ways to use this, and it's totally up to you how you want to play it. Personally, I vary depending where I am, of course. I often out in the morning, London Open, playing golf or whatever, but I use my MT4 charts and I'll let you know if I spot anything on those. But if you've got these, you can trade them very, very easily. Now you may not prefer to trade reversals. You may prefer to trade continuation patterns, which is fine. That's perfectly acceptable and normal. I love that. It's much easier. No calculations to make. You're just looking for price to continue that pattern. Before I do though, have a look at, let's draw this here. Reversal there. Reversal there. I don't need to do any more than that. There's loads of them. But here, have a look here. Have a look here. If you don't want to go down to the 5-minute, you don't have to. But have a look at the volume indicator below at this point here. Within 15 minutes of it hitting that, you've got a very high volume coming into the market. Enter. Buy. Now in this example here of this short on Friday, you didn't get actually volumes coming into the market for probably, 15 minutes, half an hour even, before the price actually bit and came down. So that's your reversal point. If you are long a position and you see that the price has come outside the channel, you've got to exit immediately. You cannot hold on to that. So let's talk about continuation patterns, which might help you with the guys who want to just trade continuation patterns, which is fine. So let's get rid of that for a sec. Bring this on board. Now you'll have these. If you've got the gold on steroid software, you'll have these. You'll have the buy signals and the sell signals. So there's a couple of things here, isn't there? You can see straight away. Now, here we go. So in this example of this reversal point here on this order block, and the volume went higher, we can see that this is lagging. The price actually didn't re-establish itself for a continuation pattern until much later, did it? But if you want to wait for that, that's fine. So here is an example. You can say, right, okay, I've got my buy signal here. I can put my stop. I can put my stop at the bottom of the channel, somewhere here, and you can see the channel. I don't want the price to go outside the channel, so just at the bottom there's 66 pips. You can take your target to the previous swing high, which is over here. So even if you miss that entry here on the reversal because of higher volumes, you can wait for the conversion and the price to have that continuation pattern and bank 179 pips back up to the previous swing high. Now here's an opportunity. You've got a sell signal here. not an outside bar, so it's not a strong signal for a reversal. Here you've got a buy signal. And in this instance, have a look at this. The price tried to break out outside bar on demand, but look at this tool here. Not even close to a buy signal. Not even close. So this indicates that the reversal is completely valid, and you can get into that as you wish as soon as the volumes come up. So let's get volume back up again. It's not the one. There we go. So there's the volume. So in this instance here, we can see that the continuation pattern to the downside is still valid. There's going to be a divergence there, by the way, as well. And you can sell it on the volume indicator if you wish. As soon as the volume comes into the market, just sell it, click the button, and then work out your stop above the previous candle and just let it go. When I say let it go, I mean don't keep it there a week. You know, if you're going to bank, what is that? From somewhere in there, you're going to bank 169 pips. Take the money. Okay, take the money. And especially if the price is still showing high volume, and then it dissipates as Friday afternoon dies off. So a fantastic system of using the tools on the gold on steroid software in several ways. Now, yes, we can switch everything on. We're going to get the buy signals, entry, stops, 3 targets. That's fine. But sometimes you have to think a little bit cleverer than that. You have to think on your feet a little bit more if you want to be a professional gold trader. You have to think about outside bars. Where are they? Where is demand? Where is supply? Etc., etc. Once you know that, then you can actually come into the market with confidence to say, I'm looking for this area to buy, I'm looking for this area to sell. Hopefully you find that helpful. Please give me some comments if you're happy or you have any questions. That's what I'm here for.